These quality small cap stocks are just being poleaxed. They're forced to raise money, and it's like an S bend. But there are pockets of the market that are going parabolic.
Hello, and welcome to the Market Bull podcast. Please note, topics and stocks discussed in this podcast are not financial or investment advice. Tony Locantro is an investment manager at Alto Capital and has spent over 20 years specialising in ASX small cap mining and biotech companies. Tony started this show by talking about the state of the current small cap market and what the run into 2024 could look like. He touched on various commodities such as gold, uranium and copper, whilst also mentioning a few of the biotech companies he's interested in. Here is Tony Locantro. So hello, I'm Ben Kostrich, and this is the Market Bull podcast. Joining me today, again, a regular, I haven't spoken with a while, but is Tony Locantro, an investment manager at Alto Capital. Last spoke with him probably around the mid-year period or a little bit after that. And well, he looks incredible. He's on a new diet, but he's here to talk about the markets and everything happening. So welcome back, Tony.
Oh, great to be here, Ben, and a lot to talk about, and I'll try and be as open as I possibly can. Mind you, I have been a stockbroker for 25 years, and to be totally blunt, this has been the shittiest 2 years of my career. And I was saying to a client today, look, I get the joke now. These quality small cap stocks are just being poleaxed. They're forced to raise money, and it's like an S bend. But there are pockets of the market that are going parabolic, and I think that speculators should be mindful about if they're punting, if they're about to become addicted to it, and the rules of speculation.
Yeah, well, I know October, which we've just sort of come and gone through, is typically a bit of an iffy seasonal moment in the markets. There's a lot of correlations with the US, and well, as we're approaching, going through November into the new year, suddenly there's a bit of, I guess, relief or potentially a bit of movements within sectors. But I mean, from your point of view, I mean, as we're going towards this, 2024, it feels like just a few days ago it was, Happy New Year 2023. What are you sort of seeing happening within the markets, the Australian markets and greatly across the globe?
Well, we just had another interest rate rise. RBA, Melbourne Cup Day, get it in while everyone's half tanked. It's quite a sad situation because we've gone from 0.1 to 4.35. People have come off 1.99% interest loans. They're going up towards 6 now. So that's going to be a bit of a speed hump for many families. I don't buy this bullshit that people say mortgage holders are doing okay because they're probably hanging on for grim death and they're taking out personal loans and credit now. So that macro situation for us is pretty cooked. I think Australia's going to need a reset. We've got the rental crisis, unbelievable. So you're going to have people, middle income earners living in their cars, all couch surfing. So it's actually, and you've got inflation, you've got everything going against us. So I think we're stuffed for a few years, and I think we need the reset. And unfortunately, it's going to be with a lot of pain. And you're going to see job layoffs start as well. You're going to have essential workers like your police, teachers, fireys, nurses, all protesting for higher pay because they can't afford. They can probably afford a cardboard box near where they work. So it's, you've got that economic backdrop, which unfortunately can only get worse. And we need to deal with it. And I look at my side of the market and you look at the biotech sector, you can put out no amount of good news. And some of these stocks are down 90% off their highs. We've got a scramble between the billionaires for lithium assets. I'm a little bit perplexed as to why. Have something that goes to a massive valuation, then buy a stake and try and block it. I think Mindtown were talking about cost blowouts ages before the share price went to $3. So there's lithium everywhere because the lithium sector has become .com Mark II. And during .com, even the best mining companies had to get a .com project because shareholders were pissed off and they backdoor any .com crap into it. And, this process of backdooring and speculative mania goes back to the 1600s, and nothing will change, whether it's that's an AI bubble, uranium, plutonium, ammonium, all those bubbles, and then people get torched. And then we wonder why there's low growth in people willing to back these companies. So it's been worse than being sandpaper to death. It's tough on everyone. You've got lots of companies out there that with quality projects from mining to biotech, and they're just suffering because interest has waned, and the speculators are chasing all the pretty girls, and we're seeing land rushes, James Bay, the Pilbara, and these valuations are absolute insanity, and it can only end in tears.
Yeah, some of the activity, especially in the lithium, we've seen, Gina Reinhardt, it's flooded the news in Australia and probably across the globe of these players coming in, and then all the focus goes on lithium. And I know there's this, overwhelming picture that's been painted that, lithium is suddenly the only thing that we need to go down this electrification path. And you almost get the blinders, the tunnel vision on, that you don't necessarily sort of look at anything else outside of that. Like, copper, I feel, has just been a no-brainer, but just such an unloved commodity for a while. Uranium finally started getting some, I guess, energy under it, polite pun, but it's, again, cooled off a little bit now. But, there's so many points there that you just raised about, the pressures on everyday people. And there's sort of this doom and gloom, but I always like to see that there's definitely those aspects of the market that, or some areas that it's, there's potential upside that's just not being realized yet. And I think I've spoken with a lot of people recently about, this idea of just getting back to being patient, and this idea that, you're not trying to make a quick buck over 1 year. It's like a 10, 20, 30-year process, but it's very hard for people these days to stay that course. So especially in your role at the moment, and we've talked, it's almost sad that I've only ever really spoken with you when we've been in these sorts of awful down market conditions. But what are you really sort of highlighting to investors and your clients about where the opportunities could be emerging, and almost, reinvigorating them in regards to almost traditional investing strategies?
Oh, great question. And I guess it gets down to the advent of the smartphone. So we're all, pretty much the world is drowning in dopamine. So we're all addicts. We all want that hit, and that extends to cocaine, porn, and sugar, and all of that stuff, gambling, thrown in. So I speak to clients, and they want a quick fix. They're saying, well, okay, they're going to build a mine. This is going to become a legitimate mining company, but I don't want that. I want something quicker. So you can make money slowly or lose it quickly. So that's the problem. And if my 15-year-old son will sit there next to me, and all he's doing is scrolling on his phone, there's no point having him in the car or around. So we've had a whole generation wiped out with crypto and that complete NFT bullshit. I mean, seriously, Bored Ape Club, come on, the aliens are laughing at us. So I'm just saying to clients, look, life's going to get back to lower ratios on everything. To buy a house, we'll get back to simpler things. We won't think that we have to go out and buy all this consumeristic crap, and it'll reset. And then suddenly there'll be some romance in buying small cap companies. But now you go to the post office and it's full of chest statements, which are, which went out with a Commodore 64. So that's the mentality of young people. And unfortunately, it's the mentality of seasoned speculators, because what did you have in the 90s prior to the advent of all this technology? So I actually think it's going against the mentality, but there is a small percentage of investors out there willing to back these companies for the longer term. But what we're seeing in placements now is a lot of placements are taken, they're massive discounts, and then the stock comes out straight away. So what I'm reiterating to clients is big pharma will not care about the market. If they see a product worth buying, they'll acquire it. These companies are on their knees. So they're negotiating from a place of weakness. And you've got gold companies in Australia, resources in the ground, some of them close to mills, trading around $20 per ounce in the ground relative to market cap. And that's just unheard of because it's probably a third of what it should be, especially at 3,077 AUD gold price.
Mm.
But what you're saying is, so lithium's come off, stocks have gone nuts. Gold, breached 2,000 there, AUD, record highs. Yep, there's zero sentiment in the gold juniors. But if you make a discovery, if you build the ounces that a major will want, you're a takeover target. And there's lots of predators out there. There's lots of regional exploration and consolidation. So I'm extremely bullish on the gold sector. Copper, what a joke. Eagle Mountain, under 7 cents, stably. Eagle Mountain stably have fallen in unison. Other AIC mines, all these copper companies just out of favour. And you've got to look towards what drugs are going. We've got biotech companies in phase 3 trials that get sold down at record lows. It's irrational. Sentiment is at rock bottom. Or I look at my clients, and I think I've got 2 clients that ring up excited about the opportunities. So let's call it 2% are excited about this market. You either got your head in the sand or you've given up. So this has been brutal. Because normally when I get a period like this, it's a V-shaped recovery. But no, it's affecting the psyche of companies and speculators, because this is where many will give up. And then they tend to come back at the top. And then the process starts again. And I've noticed that I've had, apart from really Spartan this year, which has been Gascoigne, and a recovery in Dimerics, this has been a tough year because everything else is down. And that's what I'm dealing with. But I'm dealing with good fundamentals. Yeah, I've had some setbacks, but I've been at this game 25 years and the fight back's on. So opportunities everywhere. And it's like a kid at a Lego stand or a single male at a beauty pageant. Which one do you take home?
Yeah, no, I appreciate it, because every time you come on, you're always blunt and I guess honest. And I think there's a lot of people out here that will, I guess, sell you sort of falsities and try and pretend that everything's all right, and it's not really the case. But you just know there, like with gold, for example, at an all-time Australian high for exporting prices means that the discrepancy is emerging between the producers like your Northern Stars, your Evolutions, your Newmont or Newcrest. I'm not sure if that's officially gone through, or I think it has. Like they have got cash over fists, and they're looking at building into the more ounces, which gives them an opportunity to look at all these potential gold explorers that are building up assets and potential packages. But then there's no talk about gold. There's no real interest in it. I mean, do you have any ideas as to why we're still in this? Again, given the market conditions, you would just expect gold to be having such a more prevalent talking point and position, but for some reason it's almost just ignored. Do you have any thoughts on what's happening there?
No one's caught gold fever yet. So you look at some of the best gold hits, Southern Cross Gold in Victoria and some others in WA. But I think to really catch on, you need that neurology. And that neurology, from my experience, goes back to the Gawler when Helix hit. That sector went nuts, and you've had that prominent hill Carrapateena region. Heaven help us if we get a bubble in the Lachlan Fold Belt of New South Wales. But you need neurology, you need greed to make a return. It just hasn't happened for gold and silver. And you need to look back to 1978, 1980 to see when the stocks went really nuts. But a good gold company can operate in most gold price environments. I look back at some of the articles I wrote 22 years ago, and the gold price was $250 US an ounce. So I just think gold, you don't need to be a huge gold bull. If you've got good quality ounces in the ground, you can sell it for 3,000 Aussie an ounce, produce it at 1,500. That's a huge margin. And you're going to see with these high prices, companies will start to hedge. So they'll lock in the production, and as long as they can deliver. So I think, I remember going back to .com tradinghot.com stock would go 5 times. New flow, 5 times day one. Uranium bubble, 2005, 2006. It was uranium fever. So every bombed out tech company went to uranium. And it's the same enthusiasm that we've seen for rare earths and now lithium, which has been reinvigorated with the Liontown bid and Gina and Midres saying who's got the bigger. Yeah. So it's just a case of catching a wave. See, the commodity can go completely against you, but unless speculators would have pumped, it's hard work. But this correlation, Ben, goes back to, you look at the US indices, which have held up. Admittedly, it's been the Magnificent Seven that have done all the work. 7 stocks in the S&P 500, for Christ's sake. And the spec market has, outside of lithium, rare earths, and whatever other bullshit, has tanked. Whereas you'd expect the indice capitulation to see that. So it's just been reversed. And those that are betting against the US economy have pretty much been wiped out or done nothing because of 7 bloody stocks.
Yeah.
Like it's upside down. Who would have thought all the events in the world you'd put on your bingo card? It's just crazy. And now we've got war, we've got the threat of that. COVID's making a bigger comeback than Johnny Farnham. So, you've got little things. Well, I hope he can make a comeback. But anyway, we've got things. I know, I do. But I mean, and that's what's happening. So I just think you've got to stick to fundamentals. And that's the common theme of the steady players. And it goes back to your temperament. So I say to clients, look, let's just let this company get on with what they're doing. I know the share price sucks. I wish it would be higher, but they're paid to do, and they haven't deviated. So you just got to wait, and that's it. We can't fight this market. And I know I always talk about order envy. People in lithium stocks, are they really holding that wrong? Could you hold Northern Star from 1 cent to $15? Maybe if you're in a coma or in prison with no Wi-Fi, you might have been able to, or you lost your holding statement. So I think there's lots of hype, lots of BS to sell people the dream. So it's honestly, it's tough. I look forward to the Christmas crazy season because some of these stocks can run. And what I've noticed the last week or two is traders will just target a stock and it'll run on no news, or it'll run on not much. And I think the trading activity is building, and I think we could have some fun up until the Australia Day weekend or period. Then it gets serious again. So yeah, I think we'll see some crazy stuff on the screen, Ben.
Yeah, I've heard some great podcasts myself recently about, the idea of dopamine and lacking patience, and almost this idea of, from an investment and generating wealth, of literally putting your password somewhere and just not being able to access it for a certain period of time, and almost taking this step back to be like, I need to lock it in something that I can't even access it, because we know people can't remember their password, an hour after they've set it for most devices in some cases. But I like what you said there about the biotech and the big pharma industry, because I think, again, their group, especially in the US and some of the massive ones, there's so many Australian companies that are working quite diligently with the FDA and making progress, but they've got a very different, I guess, news structure comparatively to mining and explorers. And I've spoken with a few saying how much more difficult it is for them to communicate what they're doing because there's just limited amounts. But you can just tell that big pharma companies have got their microscopes out as well, similar to probably some of the big sort of gold producers going, we've got money as well, and we're just looking at these great opportunities, these trials that are getting some results, and just looking to make an acquisition. But that's something that, again, no one's really looking at, and they are. So what sort of areas or what parts of the biotech scene, either in Australia or elsewhere, has really sort of given you a bit of interest, or at least that you're following and monitoring?
Oh, Dimerics in the kidney disease space. So they're in phase 3, and they signed that potential licensing deal with Advance. $10.8 million up front, potentially $219 million in royalties. Yet the share price was struggling around 6 to 7 cents. Suddenly it went to about 20. So what that does is reiterates that these companies have real stories. Yes, they've had to dilute. Yes, they've had to issue options to get these deals away. But you don't turn on management and you don't turn on the progress. So I like that. I haven't read Imogene's announcements, but that was in the fours recently, and it got up to 14 today in quick time. So I'm looking at CAR T, I'm looking at biotechs around fibrosis that they've got the market caps that are well below a shell, but they're going on with their progress. I look at companies that have blood tests for endometriosis, esophageal cancer, and one that can pick up diabetic kidney disease 4 years before it happens, yet the market will not reward it. Fair enough, proteomics has held well. So I look at those areas in biotech. I did have a setback with one of my companies, Narada. Their cholesterol inhibitor failed a tox, so that's probably going to have to make a bit of a comeback. That hurts. I mean, it's some of these things happen. You are going to have failures in biotech, as with wildcat oil drilling. So I guess if you know the odds, but that's what I'm looking at in biotech. I see massive upside potential in some of these companies, especially with brain cancer, where some of these drugs can. I mean, once people get to a certain stage, you're pretty much gone if that can extend your life. One of my other companies I've been involved with, Pharmost, are looking at MND, which is another insidious disease. That share price hasn't done much. So lots in the biotech sector, which I'm focused on. And, I'm going to be looking at some of my top stocks for next year. But, oh, God, the last couple of years have been tough, really tough. I look at imaging, I look at prostate cancer, there's just so much potential, yet we've got FOMO over, a sector that's, I think, well overcooked. So that's the way it goes. And with every bubble, we're going to see that, when uranium went nuts 2005, a lot missed out and came back at the top. So you've got to be disciplined to survive being long-term in small caps. And that's it.
Yeah, I mean, I've looked at a lot of conversations about, brokers and investment managers saying that, literally, you're not going to be able to nail every single investment and some are going to go down. But the ones that you do get right, the 1, 2, or 3 are the ones that have got the potential to make the majority of your wealth. And you don't need to have every single one of your stocks or assets in the green all the time. But those few that do run on have the potential to make a massive amount of difference. And I think that's where it goes back to, again, yourself and more of the education and being that stable voice for people to go to, because there's just so much of that. Either, I've been burnt, I don't ever want to go near stocks for investing again, which I think is probably, everyone's up to making their own decisions, but I can see why people haven't done that. But for yourself, from constantly dealing with, I guess, the questions and bereavement and I guess emotional stresses that people are unloading. For yourself personally, again, removing a bit of that and going back to the fundamentals. How are you having those conversations with people? And more so, I'm going to talk about more of your personal life. You can tell that you've become infatuated with the diet and the fitness side of it, which has been a good, again, sort of alignment with, helping people find different ways to prioritize their, I guess, compulsion towards. What sort of things have you been doing along those lines?
Well, I think you need to remain mentally alert. So, I did a shit ton of research on, I just tweaked. I saw Dr. Anthony Chaffee on 60 Minutes, and he said he only eats meat and vegetables are trying to kill you. So I did all that research and I was satisfied. So, I was going to the gym 5 times a week, lifting weights, and I wasn't getting results. And then I thought, well, let's try something different. December 31 last year, I was drinking low-calorie Jacob's Creek Sparkling. Don't laugh at me, Ben. Don't laugh.
I wouldn't go near that stuff.
Yeah. And I said to my partner, I said, let's just take a year off alcohol. So I don't miss it. If I'm after a drink or something slightly complex, I'll drink kombucha, which is probably not perfect. And when I take my son to the footy, I'll have a coconut sugar or whatever Optus Stadium is selling, apart from phone plans at the moment. So, all that's on and pretty much carnivore. And everyone says you're going to get scurvy, you're going to get heart disease and all this other. No, No, it's so, yeah, I couldn't believe it. 17 kilos down in 4 months. Gym all works, mental clarity off the charts. And why not? Why not
Mm.
do something? Why not become addicted to something that's going to be a benefit rather than becoming a binger, eating Big Mac meals the whole time? So it's an interesting journey to research. My kids are sick of my lectures. So
Yeah.
I try and give my son a life lecture. It's like, did you know 340 million years ago, plants developed toxins so insects wouldn't kill them or eat them? And he goes, Dad, shut up, will you?
I've had enough of this.
Had enough of this. Oh, the other thing I took up, paddle tennis. Oh my God, I love that.
Yeah, that's from, I saw a
Yeah.
bit of that in the Formula One Drive to Survive documentary. I haven't had a chance to
Oh,
play that yet. That looks phenomenal.
and Cristiano Ronaldo is putting $15 million into a centre in Lisbon. And a lot of the Formula One guys do it, soccer. I'm 52, so obviously I want to protect my joints, but it's great. And the reason why they say it's great is because it gives you get that dopamine reward more so than tennis. So it is good for your dopamine rather than day trading, cocaine, porn, and sugar. So I cannot recommend paddle enough. And I wish I could play it more. And if I had a choice, if I had a lot of money, I wouldn't buy lithium companies. I'd build my own paddle court. There you go.
I was literally about to say there's a good highlight there. It might not be going all well and good in some of the aspects of the market, but just because it's not necessarily a stock, there's definitely still opportunities to invest in other things. And yeah, I'm seeing that sport sort of take off as well, and I'm looking forward to trying it in the future. But we swing back to, I think you touched at the beginning about where we could be going in these next sort of 6 to 12 months. I mean, where do you really see I guess us venturing into everyone like to say you can see the light at the end of the tunnel, but it almost feels like it's this long, as you said, long progressive reset. It's just a matter of there's going to be opportunities that are emerging along the way. So what do you really potentially foresee unfolding over the next coming 6 to 12 months? And as you could touch wood now, eventually we know that the RBA in Australia and likely other Fed banks are going to halt or reduce interest rates, but no one really has a great idea of when that's going to happen either.
Well, I think when you're in a generational bubble fueled by COVID, you have to correct. You have to go through pain. And I was recently in Japan, and I look at that country that's had 3 decades of being in the wilderness, and people are still respectful. And immediately you go through the subway system of Tokyo. It's not like Wynyard Railway Station in Sydney or what we're seeing in Perth. And they haven't spent a lot of infrastructure, yet people can still be polite to your face. Maybe they're laughing at me behind my back, but that's what you get. And unfortunately, I don't see that happening in Australia. And now you watch shows and there's flash mobs in the US going in and robbing stores and shoplifting through the roof, and people are going to resort to crime. So I just think society, to an extent, will decay a little bit. I was a cop during the recession we had to have, but those days there wasn't all those addictions. Meth wasn't an issue in the early 90s. It'd just be a case of people falling asleep in taxis or drunk people at the pub that wanted to fight you. So I think society, we are going to have a reset, and it comes from having the mother of all bubbles and in asset classes. So I think it's going to be tough into the foreseeable future. But trading activity begets further trading activity, and FOMO, charts, chat forums, Twitter or X, sorry. I think, and then validation from bigger companies. So I think where we are value-wise, this is the buying opportunity. It's probably a 10-time in a lifetime buying opportunity.
Yeah, I agree. And I see so much commotion out there of every man and his dog putting up a chart, and I think there's almost this funny correlation that any bloke on X can now put up a chart and draw some lines, and everyone just assumes they're a genius. But there's definitely this sort of realization that not everyone exactly knows what they're talking about, and everyone's a genius in hindsight. But there definitely are these opportunities emerging. It's just about listening to the right people and doing the research yourself, and also, of course, understanding your risk threshold, because I think, especially nowadays, you've just got to be comfortable that, at the end of the day, these are investing. And if you're going in it with a certain game plan that you want to be out in a year, you've got to be willing to potentially take a loss. And we need to go back to that traditional of, I'm looking at myself in 10, 20, 30, 40 years time, as to what my capital structures might look like. But no, I appreciate you jumping back on the show today, Tony. It's always a blast. It's always a good reality check and not fluffing or beating around the bush with it. So yeah, I'm looking forward to speaking with you, hopefully before the new year, but definitely in the new year. And we'll see how it's all unfolding.
I'll just give a plug. I've got a website now, TonyLocantro.com. So I'm happy to give a few insights just with an email once a month, and maybe a bit more access to my media. So yeah, TonyLocantro.com, and you can throw barbs at me, whatever. It's as I said, look forward to getting back on the show. And before the end of maybe if you can do it a bit later, I'll provide my top stocks for next year that hopefully won't do a Thomas the Tank Engine.
No, that's exciting. I didn't know you'd launched the website, but yeah, recommend listeners to go and check that out. And I'll go look at that now. I had no idea. So I'm sure you're quite popular on X. You post a few things quite frequently. There's not as much sport content, but we're heading into the summer of cricket. So hopefully you'll put up some amusing stuff with that. Up Maxwell for making his 201 the other night. But no, thank you so much, Tony. And I'll be speaking with you soon to go over a lot of what you've just discussed there.
Yeah, absolutely, Ben. And thanks to your audience. And let's 2024, let's kick some ass.
Thanks for listening to the Market Bull podcast. If you enjoyed it, please make sure to like and subscribe. You can follow the Market Bull on our socials at Twitter and LinkedIn by searching The Market Bull. You can also subscribe to our newsletter on the website by visiting www.themarketbull.com.au.